Good evening, everybody. How's everybody doing tonight? Insane. Oh, I'm doing well, Husky. Good to see you. Yeah, good day so far, that's for sure. Hopefully, will be a fun lecture tonight. We'll get started here in just a couple minutes. Just going to give a couple more people the chance to hop on in before we get started. Any questions, comments before we get going? Hey, Aaron, good to see you again. Welcome back. All right. You guys are quiet tonight. That's okay. I'm going to send out one more message letting everybody know we're going to get started, and we'll get right into it. All right. Well, I'm sure some others will trickle in as we continue throughout the hour, but welcome everybody. Welcome to the lecture for tonight. I'd like to think that a lot of you were in last week's lecture, but if not, I'll give the quick kind of 2 to 3 minute recap. Essentially, what we talked about in here last week is we reviewed some concepts related to price action. And we talked a lot about, I'll say, kind of the theory, even though we were referring to the charts. However, we didn't really go through and talk about how to use these sort of ideas in order to actually create trade plans. So what I want to focus on tonight is really going to be a chart heavy lecture and help you all understand the mindset or kind of framework in order to use charts to set your bias for any given name and form a trade off of that. So as I mentioned in my announcement, this should be a bit more of an advanced lecture. I'm not really going to describe too many, I'll say, introductory concepts unless you ask a question on it. So highly encourage everybody as we go throughout this lecture. Definitely don't hesitate. Ask questions if they come up. If you want me to cover anything again, feel free to let me know. I'm happy to cover things as many times as you like. And with that being said, let's stop wasting time and get right into it. So obviously right now we are looking at the SPY. And when trading in any financial market, really important to get a kind of idea. I shouldn't say any financial market, but when trading in the stock market, you should first be mindful of what the overall market is doing, right? And there's a couple of reasons for this, but I'll talk about the main one. The number one reason why it's important to understand what the rest of the market is doing is it gives you a reference to compare individual stocks against. in our discussions on price action, we focused a lot on kind of the EMAs and how to use those. But in general, right, taking a step back here, when you're analyzing price action, when you're analyzing charts in general, it's very important to be able to identify a name that's exhibiting relative strength versus a name that's exhibiting relative weakness, right? Especially those who are kind of more focused on the options side, which I would assume is the majority of us in here. As options traders, especially options traders who are looking in the 0 to 3 month time frame, you should really be focused on trading those names that are exhibiting relative strength or have exhibited relative strength recently, because ultimately those are going to be those higher probability trades. Now, obviously, right, there's nuance to this. You know, sometimes you want to go short on the names with relative strength just because you think you can catch kind of that rubber band reversal. I think the name that sticks out to me the most is something like a Baba that's up, you know, something like 40% in a week. You know, while this name is showing relative strength, some people might be looking to short this one just because, you know, there's those opportunities. Anyway, I'm not going to cover that sort of strategy too much today. But again, just to reiterate, all analysis of price action, of technicals in general, should always start on the indices. Whether you trade them or not, or give it too much weight, you should absolutely be referring to what the rest of the market is doing. And kind of the most important benchmarks to do that on are going to be your S&P 500, the NASDAQ, maybe the Dow, maybe the IWM. Those are going to be kind of your major market indices that cover a broad range of names that we're going to be most concerned with. So starting with the SPY here, and as I mentioned, guys, this lecture is going to be a bit more advanced. I'm going to talk through kind of my thought process. This one I won't analyze live since we already did this one last week and the levels still remain exactly the same, but still going to kind of highlight what we have going on here. So if you're looking at the SPY here, right, there's a couple things that should be noted. Number one, from a price action standpoint, we broke above prior all-time highs right around this 565 and retested that level perfectly today. I mean, literally to the tick. The low of the day was, let's see, 565.27. So we're about 10 cents off that all-time high. So perfect retest of that prior all-time high. As a price action trader, this is very clearly your line in the sand, right? In terms of bullish or bearish sentiment in the marketplace. And let me explain why. Obviously, any all-time high is going to be a significant key level. And as price action traders, we need to be paying attention to key levels or the most important pivots within a trend. And we've talked about this in last lecture and lectures before, but some key pivots in this trend would be this higher low here, maybe this prior high here. That's probably going to be the most key levels in this area. And probably this current all-time high is also going to be pretty important, right? And you'll notice this should look pretty similar to the levels that I currently have. Almost exactly the same minus this one. So let's have that. Anyway, our key levels are going to be those pivots in trend, right? Again, here where price action reversed, here where price action reversed, here are prior all-time highs. So now we've established that this level is the most important level here in the short term, right? This prior all-time high, pretty evident that there was very clearly some amount of buying and selling taking place in significance at this level in the past. And as a result, it's going to be key in the future. So this needs to be your line in the sand in terms of looking for longs versus looking for shorts, right? As we remain above this level, as a whole in the marketplace, there's not much of a reason to be short. There's not much of a reason to be bearish. So now you know, at this point, our whole bias for all the charts that we look at should be set, right? We should be looking for names that we can get long on until we crack below this key level, right? And from there, we'll still want to monitor those names that we wanted to get long on because there's a lot of key support below. There's this nice trend line sitting right here, waiting for buyers to step in there. So a lot of other reasons to still be bullish if we break below this level, but definitely a good time to take your foot off the gas and then wait for that next support to be established. Are you guys all on the same page with me so far? I don't want to overload everybody and make sure that we're kind of building logically and making sure I'm not losing you all in the process. Husky's feeling good. Aaron's feeling good. Well, of course, you two are feeling good. How's everybody else doing? Any questions, comments, concerns so far? Hopefully, to most of you who have been to my lectures, this should be new information. Maybe it is, maybe it isn't. Presented in a different way. Okay. All right, let's keep it going. So again, right, at this point, we know the market is in a kind of bullish territory, right? Just based on these key levels alone. But like we talked about yesterday, we could look at multiple other things. Like, for example, if we zoom out to our weekly time frame, look at some of our longer term moving averages, very clearly, this is an uptrend, right? 20 moving average over the 50 moving average over the 200 on the weekly. Same story on the daily, right? All of our moving averages are trending positively here as well. Same thing with our shorter term EMAs, right? Our 9 EMA is above our 21 EMA, again, putting us in bullish territory. We could even look on the shorter term and figure out what's going on with our kind of 5 daily moving average and look at that on the lower time frames. But for now, very clear, the S&P 500 is 100%, without a doubt, in an uptrend. So again, our bias is now set. We should be looking for names to get long on. So there's a couple different mindsets to be thinking of, right? There's kind of the longer term mindset and there's the shorter term mindset. As a shorter term trader, you should likely be focused on trades showing the most relative strength. Considering that you have a time till expiration, you want to be in those trades that are going to work out quicker. If you can have a longer term mindset, you want to be in some of those trades that maybe had shown relative strength in the past as part of sectors that have shown relative strength in the past, but maybe are a bit weak here in the short term, right? And that looks like maybe a leap buy or a share buy, right? You know the market's in a long-term uptrend. You know that uptrend's likely to continue. So you want to identify maybe some good buys that are just in kind of a short-term downtrend. So let's start by taking a look at some names exhibiting relative strength. First, we'll take a look at Meta. Oops, I just realized this is such an absolute mess. Take a look at Meta here. And let's do this one. All right, so Meta here compared to the rest of the S&P is clearly outperforming, right? If we take a look here, Meta also set prior all-time highs right around the same time frame. So mid-July here and late August here. It set this high right around, a couple weeks earlier and right around late August. So just a bit earlier here. So Meta actually topped out these prior 2 times a bit earlier than the S&P. Now taking a look at Meta, right? On these days that SPYs began to show, a small amount of weakness, pulling back a little bit off these highs, Meta has remained incredibly strong above the highs, also remains well above a positively trending set of 10 and 20 exponential moving averages. And very clearly, there's one key important pivot to be paying attention to as kind of a, I'll say, trader with a larger term mindset, or one that can actually zoom out a little bit if you're not trading, same days or weeklies. We have this real key pivot right here, right at these prior all-time highs. And I'll just walk through my workflow really quick. Typically when I'm marking out these real key pivots, I like to go ahead and mark it in a level that's orange, just because I like to see that, makes it clear. And we would probably label this prior ATH. And I like to show the name of that. So now we know this level is pretty important, and I might even shift it up just a bit to 544, 544.23. All right, and even so, another way to kind of justify the relative strength in Meta is also by taking a look at the Qs, right? The Qs are even a bit weaker than the SPY in the sense that QQQ hasn't been able to surpass its prior all-time high set in mid-July, right? It's actually still trending below that mid-July all-time high. So Meta being a part of kind of that tech sector as a whole, I guess specifically it's included in communication services, very clearly outperforming its kind of more narrow group of technology stocks. So Studio says, what are the green and red cloud indicators I'm using? Yeah, good question. The green and red cloud indicators essentially represent the 10 and 20 exponential moving average. So when the cloud is green, that means the 10 EMA is trending above the 20 EMA. And when it is red, that means the 10 EMA is trending below the 20 EMA. And the reason that's important is for a short-term trend, you definitely want to see that 10 above the 20 if looking long. And also conversely, if looking short, you definitely want to be seeing that 10 below the 20 as kind of a trend-focused trader. All right, so Meta here, right? I think we've established at this point that this name is pretty clearly showing some amount of relative strength, right? So this means that this name is something that we could have some interest in, right? This is certainly a tradable setup at this point. Maybe not right at this point, I guess, but in general, the price action as a whole, certainly positive, and no reason to shy away from it. So let's talk through identifying some key levels to be looking out for and ways to structure a trade off of this notion alone. And let me remind you all, this has been really simple, right? We looked at the S&P 500, we identified the trend, right? Simple, trend is up. Then I personally knew that Meta was showing relative strength off the top of my head, but typically the workflow would be looking through a couple of charts, looking for some of the strongest names here in the short term, right? Meta, I just knew was one of those names. You're not always going to know that. Sometimes there's going to be some scanning that's involved, which is totally normal, right? The first name that you pull up isn't always going to be the best, and that's totally fine. But now we've identified that Meta is showing some amount of relative strength. So let's start developing the trade plan. Obviously, we're a bit extended from the moving averages, right? And personally, this is not the best place for me to be getting involved in a trade on Meta. However, it's pretty clear that there's some amount of kind of wicks off of this specific zone right around this 564 area. So I'll probably zoom into the lower time frames to refine that level a bit, but pretty evident that there's some kind of buying activity going on around here. Also, if we remember our cycle of price action chart, we've kind of had this first kind of breakthrough the EMAs right around here, right, where we broke through the EMAs and had this nice constructive move to the upside. At this point, we should be looking for that first retest of this 10 and 20 EMA zone. We haven't gotten that yet. And honestly, the first buy point would likely be right around wherever the 10 EMA sits. So you can see now the 10 EMA is currently right around the 564 area, which by tomorrow, it'll probably line up pretty closely with this horizontal price level. So let's take a look at a couple other things. You guys know I'm a big fan of the volume profile or the volume show, whatever you want to call it. This one is going to be a bit extended over anything too significant, so not much for us to see here. We can just take a look at the hourly quick. Okay, so a decent look here from the hourly. We'll actually take a quick, spend a little bit of time and kind of analyzing the hourly here. So we identified this 565 area from the hourly time frame or from the daily time frame. To me, it looks like there's almost some kind of uptrend forming here, maybe something like that. I don't know if I want to trade that too bad though, just because it's only an hourly uptrend, and personally prefer to focus on things a bit from the higher time frames. Obviously, we have a real key level right around here, this 569 area. This is going to be our hourly point of control. So one of the most important levels in this area in the short term. So certainly going to want to mark this one out. And I'll just note, right, it's not always kind of mandatory to come down to this hourly time frame for key levels. However, when we're trading above all-time highs, we do need to kind of zoom in a bit and really figure out what's going on. There's not as much information to go off of up here. All right, so we have that hourly level set now. Now let's think of a couple different scenarios that we could be looking out for. So pretty clearly, right, after the open today, price really struggled at this 575 area, right? So in the short term, definitely would be looking for that 575 area to get taken out. And this is a level that I'd actually be interested in getting long above, right? And mostly based on price action alone, right? So we can see here today, and we could even zoom in on the 5 minute. 5 minutes not as good. We'll try the 30. Yeah, 30 is a little bit more detail. So we can see based on today, right? This was the open price of today, right around 575. We rejected that price midday. And also we've had some trouble at this area in the past as well. So if we do make it above 575, that would be an opportunity for me to go ahead and get long on some kind of shorter term trade, right? Likely next week, maybe 2 week out contracts with a target at these previous pivots, right? Here is going to be my first target right around 580, and here would be my second target at 583, right? Maybe leave some runners for higher, but this would be kind of my trade plan if I was looking for a break above, right? So wait, I guess there's kind of two frame of minds that I'm thinking of here, right? In any case, not every scenario is going to result in a nice retest of a support level that we're looking for. And some people may not want to wait for that and would rather trade these kind of breakout trades, or others would prefer to have a bit more patience and wait for that moving average to come into play. So let's take just kind of a look at what that might look like if we pull this up again. So again, right, the moving average is sitting right around this 565 area. So we can zoom back into the hourly. 565 brings us right around here, which again, we have a nice pivot right in this area. I want to move it just a bit lower though. So our hourly EMA was right around 565, but this almost looks to be more of an important level right around here. Right around there seems to be just a bit more important. And the reason behind that is because we consolidated pretty much a whole day right around here. Also had some trouble at this area in the past. So this would really be the level that I'd be looking for to get long on any kind of bounce, right? So if we come down into this level, well, let's actually talk about this. So there's kind of two scenarios that we've identified are possible here, and two scenarios that we could be looking out for. Scenario number one is some kind of breakout. So let's kind of model what that might look like. This sort of breakout trade could look something like this, where you break above this pivot that we set today. As a day trader, this would be a completely valid entry, right? We're looking at the hourly time frame. If we get an hourly close above this level, or even shorter term, we could go 30-minute, right? If we get a 30-minute close above this level, certainly could get long. Even a 15-minute level, you have a chance, but we did get that close above today. And unfortunately didn't get any continuation higher. So if we were to get a 30-minute close above this level, absolutely would be a place to start looking long, right? And you really should have some sort of contract already picked out for that. For me personally, it would probably be something like a 580 next week call. But anyway, right, that'd be kind of the first sort of trade to be looking for. Second idea, again, would be looking for this move back into the EMAs on the daily, which would bring us right around this 564 spot. So we have a little bit of support here on the hourly, as well as that daily moving average sitting there. So what we would want to see for that is we wouldn't necessarily be interested in just buying the dip. Just because we get a move down to this level doesn't mean that you should instantly press the buy button, right? That's absolutely not what I'm saying here. Instead of that, you should be waiting for some kind of buyers to step in at this level or some kind of reversal to take place, right? There's so many people who are in a rush to, I'll say buy the dip, but really it's more important to buy the strength after the dip, right? Wait for some buyers to step in and give yourself, maybe pay just a slight premium, but just waiting for those buyers to step in certainly can help your success rate on some of these trades where you're looking to catch a bottom. So that was a lot in a couple minutes. I'll take a look at the chat. Leo, can you unmute me for a sec? Yeah. What's up, Nando? Yeah, I will unmute you for a sec. What's going on?
Yo, Tostie, what's up?
Hey, how's it going?
Thought you left us a while ago, man.
No, I'm
Nah,
still around.
it's glad to hear your voice. Back to the question. What was I gonna ask? I was going to, okay. So when entering a trade, I wanted to hear about how you do it. So I've heard two different things that aren't necessarily inherently conflicting with each other. However, they kind of contradictory, and it's about the timing of entering a trade, right? So I
Mhm.
was told that the go-to strategy, or like a really good one, is waiting for the break and retest of a level. However, on the
Yep.
other end of that, I've also heard that shorting the highs and buying the lows is what you should be trying to do, and looking for a rejection off of, like, your pre-market highs or your opening range, etc., or looking off for a bounce off of the lows, like your pre-market low or the bottom of your opening range, etc. So my thing is, like, what what is your ideal setup that you're looking for to take a trade? Because I feel like saying looking for the breakout retest is inherently more of playing the direction that it's already going, instead of trying to play the opposite and catch the top or the bottom.
No, I think that totally makes sense. And I think from your question, it's definitely clear that you've learned a thing or two from both River and Madflip. So it's cool to hear you.
Damn, you knew,
It's clear to hear you mention some of those
knew
concepts we've been talking
exactly
about.
who I got both of those from. Damn,
Oh
yeah.
yeah, of course. Yeah, of course. I mean, I've heard both of those guys say it in the exact same way. So I think it's certainly nuanced, right? And I think it seems like you understand that. It honestly comes down to your preference in terms of how you like to trade. I will say that generally speaking, the I'll say lower risk trades are going to end up being those strength or kind of bounce off of support sort of trades when you're seeing that strength after the dip, or I guess weakness after the rip would be the opposite concept there. And reason being, your stop loss is always real close, and it's typically going to be a strong support or strong resistance level. Where those breakout trades kind of can go wrong, as I'm sure you're aware of, is when you're trading close to the open or even late to the close, right? It's real common for a lot of volatility on those shorter time frames, and as a result, it becomes a lot easier to get faked out, all that sort of thing. So, in terms of my preference, generally speaking, I prefer to buy strength after the dip. So I don't typically like to buy like larger term breakouts. Like me personally, this wouldn't have been a candle right here on Meta that I would have typically liked to buy. Something that I would have liked to buy is something like this, where I wouldn't really call this necessarily a larger term breakout, but rather this is really just strength after the dip, right? We have this nice long or a bar with a long wick closing near its highs here. We break above the moving averages with an inside day. And then sure, this right here, you could call that a breakout. But in the larger grand scheme of things, it's not like we're looking for this massive all-time high level to break. We're kind of getting in that trade a little bit before that's happening, if that makes sense.
Yes. Could you
I,
clarify that a bit?
I was
Because
gonna say I
like
thought
the
yeah.
the way
Okay.
the way I envision it in my head, right? Like let's say I'm coming up on like pre-market high. I have like these two voices in my head, and one of them looks like a river, the other one looks like a frog for no specific
Oh yeah.
reason. And
Yep.
the voices, one is telling me I was like, all right, wait for this level to break, retest, and then take the play up. Whereas the other one's telling me 80% of breakouts fail. As soon as it touches that level, I should be getting short. So like,
God damn, this guy's got the river lingo down. The Al Brooks
yeah,
lessons are ingrained in you. You're dangerous, dude. No, I think it's 100% two different frames of mind, right? I think River and Flips, the way those two guys are trading, is fundamentally different from each other. Where River's totally a scalper at its core, right? I mean, that guy will short any level, and he's going to be in and out for a 10 to 15% gain, and that's the end of it. Where Flips, obviously, that's not typically what he's looking for, right? Those trades happen from time to time. But generally speaking, the trades that he's looking at are going to be those kind of breakout retests, breaks above the moving averages, bounce off support, etc. With that said, at the end of the day, the types of trades that you take should be in line with your trading psychology. And the reason that I've strayed away from those breakout style trades is for me personally, I can think and execute better when price is moving slower. So if I'm looking to chase, a breakout, and I shouldn't always say chase, but if I'm looking to chase a breakout, typically for me, I get a little bit more emotional, right? It takes, I have less time to think, and it just doesn't suit well with the way that I like to think about the marketplace. Whereas some people, that's the way they want to trade. So anyway, I guess just to kind of summarize my preference in a succinct way, for this specific setup that we're looking at on Meta, I would rather be of the camp of the people who is looking to get long at the moving averages and waiting for those buyers to step in there, rather than the people who are looking to buy above, say, 580 or 583. That's the shortest way I can answer your question directly. What are your thoughts?
can you say that last part one more time? Like,
Yes. So for this specific example, the best way that I can answer your section or your question in one sentence is I would rather be in the group of people who are buying when they identify buyers stepping in at this 563 level at the moving averages, rather
gotcha.
than with the group of people who are buying this break above 575. Does that make sense?
Okay. So you are still following the trend, but you would follow it not at like a high, but rather like find a good entry somewhere before you get there. Yeah.
Absolutely.
Okay.
Absolutely. Yeah. And that's really the idea is I'm still trading with the trend, right? I'm not looking to necessarily go short on Meta in any way, right? The trend is still
Mhm.
up like we talked about. However, I'm just looking to get entered in this specific position at a place where I feel personally the risk to reward is a bit better, right? Right at this 563 risk to reward for me is really good. We're right at key support. There's a lot of buyers that have stepped in here in the past. We've got upward trending EMA sitting right at this area. So for me, it has everything going for it right here. The trend is still up. It's going to be the first retest of these EMAs, so there really should be buyers stepping in here. So for me, it makes complete sense to get long here. But I have to cater to people who trade in different ways than me, right? Because just because I trade that way doesn't mean that that's the only way to make money or that's the right way to do things, right? You have Flips with his own opinions, you have River with his own opinions, and the great part is every single one of them works for us, and it's kind of up to you to figure out what works best for you. That makes sense,
Yeah, I guess that's where I'm struggling right now, especially with all the lectures being taught by different people and stuff. It's
right?
like
And
trying to find like right
at
now
the
what
end of
I've
the
been
day,
trying to
though,
do is find trades where like both could technically be true. So like I'll wait until we get to like a low of day and then reject above that and like reclaim the nine and then I'll wait for like the breakout and retest of the nine EMA, but at the low of day so that I can get long. So I'm still playing long at the bottom while also looking for a breakout retest, just not
that's
in favor of the trend.
so you're saying, okay, let me try and draw this
Like,
out for
yeah,
you
try to, like,
quickly.
I'm sorry if that,
No, you're good. You're good. Let me. No, I think this is super helpful, and I love people never really come on the mic, and I think it's super helpful for everybody else. So this is great. Let me try and draw this out. So let's say these lines are the nine EMA. Does that work for you?
Yeah,
This
yeah,
is a
yeah.
9 EMA. All right. And then let's say that these other lines that I'm going to make red are going to be the price action of the day. So let's say we're in some kind of downtrend, right? We're below the 9, we're retesting the 9, we're breaking below. Then we start to consolidate, something like this. Then we break out above the 9, retest, and this is where you're looking to get long. Is that what you're
Right. So
saying to
like,
me?
okay. Yeah. So imagine that it's like that. Okay, you see that big dip down?
Right here.
Okay, let's say like the next dip down, like the slightly higher low. Let's say like pre-market low is right there. So we're at the bottom, which is like we're at the bottom, so I'm looking to get long, which is like Rivers ideology,
Mhm.
except I'm waiting for like that breakout retest of the 9 and then looking it to ride it up back up to whatever our highs are, if that makes sense.
Which is right here. So this
Up,
would be your actual
right.
entry.
Right.
Okay.
Opposed to
Okay.
before, which is what it would be with just the breakout retest, is we'd be at that pre-market low and I'd be waiting for the pre-market low to break and retest that pre-market low.
Have you seen this graphic before? Have you been to any of my lectures and
No.
seen this?
I've been
Okay.
to your lectures, but I've never seen this. No.
Okay. So this graphic, I think, is describing exactly what you're telling me right now. So this is from a really good book that I read almost a year ago, maybe less at this point. That essentially it's titled The Cycle, or what is it called? I don't remember. Anyway, if you message me after this, I could figure out what the hell the title of this was. Yeah, it's by Oliver Kell. He won the 2020 investing championship or something like that. So he's got some credentials. Anyway, what he says is where you're entering is effectively the lowest risk and one of the better places to enter a trade because of exactly what you just said, right? For some reason, whatever reason, right, price stalled out at some level of support. We had this large dip indicating that buyers have really started to enter the market after sellers have significantly taken an exit. And this first kind of pop above the EMAs into those newly trending or newly upwards trending EMAs is a really ideal place to enter long. And I think this effectively describes exactly what you're telling me. And this is exactly the way that I like to trade as well, is buying effectively what I'm saying is this is the strength after the dip, right? You're not necessarily looking to bottom ticket pre-market low, but rather you're looking to wait for that bounce on pre-market low, wait for the trend to turn positive again, and you're entering here, but you're not entering, waiting for this break back above these highs necessarily, right? That's where you're going to be trimming or selling the rest of your position. Is that,
Right.
are we on the same page here?
Yes, that's what I've been trying to do recently, kind of like combining those two there. Um,
Okay. I'm going to
because
tell
the
you right
breakout
now.
retest works, but like a lot of times we do just end up coming back down even after getting like a pump on one candle. Or
Right.
what I've really been getting cooked by is time decay, right? So like the breakout retest, my problem with that really is usually just that time decay where it's like I'm getting burned over a slow, long period of time because we retested and we're holding and we're holding, but we're holding with like a bunch of doji candles, not like a big burst.
Sure. Yeah. And I'm assuming you're trading what, same days, weekly, something like
Same
that.
day.
Okay, that makes sense. Yeah, so that's where you and I don't align. Is I never trade same days. I rarely trade weeklies, and that's where I'm very different
Right.
from both River and Flips. Is my mindset as a whole is I'm focused on 2 weeks. I'm focused on what's going to happen in a month. I'm not. I don't really care about 5 minute candles. I'm just not interested. I just again, kind of like I mentioned, I prefer to have more time to think. I like to trade longer term setups in larger moves rather than day trading. It just works better for me. And also, I also work a job outside of trading, so it, I can't really sit on the charts all day. But anyway, I think what you described is an excellent, excellent way to be trading, honestly, and that really reflects a lot of what I've kind of been talking about. Is what I mentioned earlier is ideally in this trend, this oops, zooming in a bit, this would have been an equally valid place to get long right here, right? And there's the same sort of pattern on the SPY, right? Same exact idea where we get this really incredible strong bar closing near ties with a long downside wick bouncing off of this prior low on incredibly above average volume. The very next bar, we retest a rising set of 10 and 20 moving averages, and boom, right? We continue to move higher. And you probably should take a trim at these all-time highs. Um, Probably would have, me personally, probably would have sold the rest of my position right here on that candle because that's pretty scary and wouldn't have held any longer and regretted it. But anyway, I think what you are doing is excellent personally. And I'd love to hear how that continues to work out for you. But that's exactly the idea is waiting for those moving averages to turn positive after the dip. There, you're entering with relatively low risk. Your stop loss is clearly defined, right? Your stop loss is always going to be either back below the moving averages or below the prior low. So yeah. Any other questions or comments on that?
No,
Did I
that's it.
answer?
DM you
Did
and
I
I'll
answer a question?
you did. You helped
Okay.
me.
Okay. Good. Okay. Good.
I will DM you so I can keep you updated on my progress, seeing how that's working. Because I do think like a lot of people in OOP probably suffer from that same sense of like different voices, different people telling them different strategies. Um, but yeah, I'll let you know. I'm ignorant trader. That's my username on Discord. I'm fairly active a lot. But I'll
Cool,
DM
dude.
you. But right now I
Well,
kind of
it's
have to go.
no, you're good. It's great to meet you. I appreciate you being here. And last word before you have to leave. Um, Obviously, there's a lot of different strategies in both this Discord, and you can only imagine the amount of strategies that are in the marketplace as a whole. So the things that you learn here are like nothing compared to what else is out here. There's so many other ways to think about the market that don't even include charts, that don't even include fundamentals. And everybody thinks that what they do is best, but at the end of the day, it's whatever works for you. It's not about what
Right.
anybody else said is best. You know, there's that ICT, and that works for some people, and that's great, right? We don't talk about that much in here, but you know, it works for some people and it doesn't for others. But anyway, you're on the right path. Stay focused on something, and definitely be mindful of what works best for you. It seems like you're pretty used to trading same days. It seems like you spent a good amount of time with flips. So I'd like to think maybe you're used to that. Maybe that works with your psychology. So stick with it if you like it. And yeah, I do really like your strategy. I think that's awesome.
Thank you. I will keep you updated on how this goes and let you know if it's an awesome strategy for my port too or just in theory.
Should be both. Should be both if you
Hopefully.
follow it. If you follow it.
If I follow, that's the key. That's a key thing there. Those SPX same days are tempting though, man.
Jesus, dude. Yeah, I don't mess with any of that, so
I
I
know.
can't relate.
I finally got therapy from them because of River. He's talked me down from them now. Like
Really? So you talk to him a lot?
a fairly good amount. Like I'm usually in trade floor with him, or I'll just jump in VC with him and just talk to him. Because
Okay.
yeah,
I
no,
gotta let him know
I respect
that
River
we
a lot
talked.
as an analyst.
I gotta let him know that we talked, and I told you to stop caring about the opening range. Doesn't matter.
Let him know. He'll be
I'll let him know, or you should let him know. You should let him know that I
yeah,
said that.
he'll be in VC tomorrow talking about how much he gets hated on.
Yeah, let him know I said that. Let him know that
Nah,
shit doesn't
River's great,
matter.
man. But thank you,
No, he
Toast.
is.
Appreciate it.
Yeah, yeah. Appreciate the question. That was great, dude. I really appreciate that.
Yep.
All right,
Appreciate you.
have a
I
good
got
night.
Yep, you too.
Cool. Yep.
Great lecture, by the way.
Thank you. I appreciate that. All right. So we got a couple other things that I think came in. We got Nando. Nando's going crazy. 90% of breakouts fail, but we continue to moon. Somebody's got to send River a screenshot of that. That's pretty funny. I'm going to send them to that. Let me let them know. All right. Yeah. All over Cal iPad. Yep. Yeah, Nick, it's so frustrating asking five people and getting five answers. And that's the reality of trading, honestly. The market is an art, not a science, right? There's no one way to trade correctly. And there's definitely a lot of ways to trade poorly. So hopefully, if you asked what not to do, a lot of people would give you the same answer. But there's really no one right way to do this. So as you go to more lectures taught by different people, keep an open mind and remember that while everybody is probably right in their own respect, we all trade differently. Like I do not day trade like Flips does. I do not scalp like Flips does, and they probably don't swing trade or trade shares like I do. So the three things that us three are doing are like incredibly mutually exclusive. And even 1K is probably a bit different than me too, but I think him and I have the most similarity. Regardless, just be mindful that as you continue to go to more lectures, it's not like we're necessarily disagreeing with each other. Like I agree with everything that those two guys say. It's just I'm not as focused on what happens on the 5 minute for the most part. It doesn't really matter to me. All right. That was an excellent question. And I just want to highlight if anybody else ever wants to come on the mic and talk about something, I would love to do that more frequently. Yeah, the more you guys want to talk, I don't want to talk to you, Nando. You don't have a question. All right, let's keep it going. So that was the example on Meta. Obviously, we talked about two kind of entry frameworks here. Again, right, there's that entry back of the moving averages, which would be my preference. And then there's those entries above that level of resistance today, right? But how do we get here? Just as a reminder and kind of a final recap on Meta, right? The reason that we're interested in this name is because number one, the overall market is in an uptrend. Number two, this name is trending better than everything else in the market, which means that there's clearly an interest of larger buyers in the marketplace. And again, the reason that, I guess the fundamental reason that relative strength matters, this is one thing that I didn't talk about, is that relative strength indicates that large money, big, important institutional investors are more interested in buying one stock over another, which at a surface level, maybe it's like, okay, great. More people want to buy this. That's great, right? But you have to remember, retail traders don't move markets. People like you and I don't mean anything at all. We're nothing in the market. I'm sure in our personal lives, we're all very important. But in the market, we mean nothing. So all we can do is follow what big money institutional investors are doing. And very clearly, they are looking to buy Meta more than they're looking to buy most other stocks in the short term. So if you are looking to trade Meta, with a 0 to 4 week mindset, this is something that you should be looking to get involved in, right? These sort of names with relative strength, strictly based on price action, right? That's it. Very, very simple. Now, let's talk about something that had shown relative strength in the past and now is showing, kind of some amount of a combination of both. This is one that I'm starting to get some kind of interest in. It's MU. MU over the past, really all of 2024 until July has been on an incredible run, right? I mean, it had moved something like, it was up almost 100% in 2024, which is obviously unheard of for most names. At this point, MU is having some difficulties, right? It's, just coming off earnings, trading pretty significantly far below these highs. If you look at this chart, there's one thing that should become incredibly obvious to you, right? The 20, 50, and 200 moving averages on the weekly, while they are still trending positively, this name does not look like Meta. It does not look like SPY, right? This name doesn't look like a name that just broke all-time highs and is holding above them. It does not look like that. However, again, there's not only one way to trade in the market. And this is a name that's interesting me more from a longer term perspective, right? This isn't a name that I think is going to double tomorrow. This isn't a name that I think is going to go up 30,000% tomorrow. That's aggressive, but anyway, you get the point. But rather, this is the name that's starting to become very clearly interesting to institutions with larger sums of money, right? First off, again, solely focused on key pivots and price action. Obviously, previous all-time highs are going to matter, right? Look at where the low of the week currently is. This seems like a really good place to define our risk. We are also right at the weekly 50 moving average. Let's label this level, previous all-time high. Now we know this orange level is key, right? We know that this level matters, previous all-time high. Let's label a couple other weekly pivots. This certainly looks like one to me, right around here, 108. And let's see. If we came up here, that's definitely a pivot, but I don't think I'm super focused on that right now. And I'm probably also there as well, high after earnings. And probably this little double bottom down here. All right, so we have our weekly pivots all laid out. Very clear, very easy, right? Simple. Again, MU on the weekly, it is technically in an uptrend, right? 20 over the 50 over the 200. I will say it's hard not to acknowledge the fact that it could very well be setting a lower high right now. Hard not to acknowledge that, right? However, as I mentioned, this isn't a name that everybody should be looking to get long on tomorrow, right? Or the next day. If you look at this, well, I shouldn't say that. You could certainly be looking to get long on this here in the short term. However, you shouldn't be looking to have, 3,000% gains tomorrow or the next day. The most important thing about this chart to me is this weekly buy volume. Look at this. This is the most buy volume on this name in 3 years. What does that tell us? The most weekly buy volume in 3 years. Let's even zoom out. What does this mean? Let's go back a couple more years. 5 years. This is still the most. In 5 years, the most buy volume. Let's zoom out a little bit more. 10 years. Okay. This is the most buy volume since 2018. So what is that? 6 years? Most buy volume in 6 years. What do we think? What does that mean? Why should we care? Why should we care about this name more than something else, right? There's a lot of things that are at support right now. Why should we care about this name? This name's relatively weak compared to the rest of the market, right? Buyers want to be above previous all-time high. Yeah, for sure. Certainly some buyers stepping in. The most important thing about this volume is volume represents the amount of buyers. And this amount of buyers, the most buyers that we see in 6 years, doesn't just happen randomly. It doesn't just happen magically. It's not a bunch of people like you and I buying 10 shares on Robinhood, right? This is serious institutional interest in this name. So obviously we're looking at the weekly here. And obviously this name is showing some amounts of relative weakness in the short term, or I guess medium term, right? It's far below previous all-time highs. Conversely, some of the other names in the semi sector are doing a lot better. However, there is some merit to this trade, right? We are sitting right at this previous all-time high. I mean, 98.50-ish. Weekly 50 moving average is right here. We are just coming off a massive week in buy volume. And also, if you look at the earnings per share here, this company recently came back from losing money over the prior quarters to now almost tripling their earnings in under a year, which is big, right? Now, looking at the lower time frames, we broke back below the 200 moving average. The 20 is below the 50, which is below the 200. So this is certainly in a short-term downtrend, right? So we shouldn't be necessarily just rushing into this blindly, right? By all marks, this is in a short-term downtrend. So for me, I would like to see some buyers step into this name again. And once we see that, right, maybe some nice long downside wick here with a bull bar closing near its high, for me, that's an invitation for me to get long. We have a key level of resistance sitting right above 106 as a price action trader. Even though it's on a nice clean horizontal level, you should still absolutely be considering this as a key level. 200 moving average is always going to matter. We take a look at the EMAs. EMAs are still trending positively, right? They had just reversed. This is a bit of a mess considering that move from earnings, but we got that nice gap up above the moving averages, and now we're back trending on top of some nice positively trending 10 and 20 EMAs. This is the first time these EMAs have been trending positively since July, so about 3 months. So what does this mean, right? Why is this so different than Meta? Well, really, these are kind of the two larger term frameworks that interest me, right? The first in Meta interests me more from a shorter term swing trade sort of perspective, right? Again, 0 to 4 weeks sort of trade. MU interests me from a kind of medium to long term perspective, right? 0 to 3 months sort of thing, right? So this isn't something that I'm getting long with weekly options. This isn't something that I'm getting long even with monthly options, right? This is something that I'd be looking, maybe some July contracts or January contracts, maybe just shares, right? Maybe just shares. But regardless of that, right, the risk to reward is still here. Again, sitting at a key level based on price action, bunch of buyers stepping in, and I think I've hammered the rest of the points home. So those are kind of the two sorts of models that I like to pay attention to. I think the last one to talk about here is probably Tesla. Maybe not. Let's think here. I guess Tesla's okay. Tesla's okay. So Tesla, similar to Micron, is not trading above its all-time highs like SPY. It's not trading above 350 or whatever its all-time highs. However, the difference between Meta and Tesla is Tesla has significantly outperformed the SPY over the last few months. We compare these two. Let's just compare from, we'll go from April lows. We'll go from April 1st, why not? April 1st to now. The SPY is up 9%. April 1st to now on Tesla is up 40%. So clear outperformance here, right? It is significantly higher relative to the rest of the market. Additionally, in prior weeks, we've had a significant amount of interest from buyers, right? Pretty clear interest from buyers here. Tesla's another name that should be of some interest to you, and you can see exactly where it's interesting to me, right? There's two levels that I'm paying attention to, 250 and 236. I think you guys should all probably be able to identify why I care about those two levels. 250 is exactly like the Meta idea, right? It's looking for that hold of support and continued move higher. Kind of like a breakout trade, but more of, I would call it like a continuation, because it's like this, getting long above this, in my opinion, would be the real breakout trade. So this is kind of just the continuation of the trend, bounce off the moving averages sort of trade. And this 236 area would be kind of that deeper pullback into a key level. Not quite like meta, more kind of like an MU style sort of thing. But again, right, two levels that I'm paying attention to. That's it, right? Again, I could switch the way I want to trade it based on where we come. If we break above this 250 first, I'd be looking to get long on this name with something a bit shorter term, right? 0 to 1 month sort of time frame. If we come back down to that level for a deeper pullback, buyers step in, I'd be looking at that for something a bit longer term, right? 0 to 3 months, that sort of thing. This is really my framework. How to identify stocks like Micron? So it's going to come down to just looking through charts at the end of the day. There's some things that you can do to maybe aid that with maybe some kind of scanners, that sort of thing. But for the most part, yeah, scans can certainly help for sure. But for the most part, it's going to be just looking through charts. So for me personally, I just have kind of a common list of names that I like to look through. So it's kind of names like Tesla, you know, your big tech, Apple, Amazon, Google, AMD, NVIDIA is kind of my default. Marvell, MU, those are kind of the summary of my tech names. Sometimes I'll look into some smaller caps like PLTR, Carvana, Rivian. Carvana also is one that's looking really, really good in the short term. Again, this is the exact same idea as Meta here, right? Significant relative strength, nice movement in the moving averages with excellent relative strength. And here now breaking above these highs. This name looks good. But anyway, we'll keep going. Let's think. I don't remember what I already talked about. Sometimes like a Home Depot or a Lowe's or something like that, just because I'm curious. Also, sometimes just looking at the sectors as a whole, like your XLE, XLF, XLI, your Bitcoin miners, Mara, Riot, your Coinbase, that sort of thing. I think that really covers most of the things that I'd probably take a trade on. There's obviously more that you can look at, you know, maybe like a MasterCard, a Visa, like a Cisco, Oracle, different sorts of tech stocks. Yeah, we blew through a lot there. But anyway, it just comes down to looking through charts is really what it is. Yeah, it's not like you're just going to have these names on the top of your head without looking through charts. And that's kind of why I am familiar with, you know, these three names in specific, is because just staying up to date on what stock's doing what, staying up to date on the daily charts of these names, and being prepared. All right, we got about 5 minutes. What questions do you all have? What else do I need to revisit for today? Oh yeah, KO and T. Yeah, how could I forget? Yeah, of course. KO and T. T, wow. Looks excellent. KO. Oh, I haven't looked at KO in a long time. This thing's at 70 now. That's impressive. Wow. It's been way too long since I last looked at this. KO actually looks great. No shit. Wow. Well, KO, well above previous all-time highs. Moving on to the daily here. Definitely a key pivot right around there, right around 72. Oh, this is just a typical KO range. Yeah, KO and T are definitely a bit of a different one. Generally speaking, these names don't move much, so you got to be real ready to play this range. Yeah, for me, I mean, KO is pretty simple. Look to get long around $70 area and look to sell around 72. That's the range that we're in right now. You get that break above 72, you should definitely be targeting these previous highs. I mean, KO is an interesting one. It's not typically like KO moving like this is pretty uncommon, honestly. Yeah, it's pretty uncommon, honestly. But yeah, KO is going to be one. You got to just focus on the range. iPad, how to decide on expiration? Yeah, that's a great question. So for me personally, as a more swing focused trader, generally speaking, I look for expirations that are at least more than 7 days till expiration. So that's going to be kind of the 11 October or 18 October chain for me right now. The next kind of thing to be mindful of is if you're trading names with a bit lower liquidity, the non-standard expiration dates are going to be less liquid. And in TOS, the non-standard ones are highlighted in yellow, so it makes it pretty easy. So these ones in gray are generally going to have more OI and volume. than the ones in yellow for stocks with less liquidity. That doesn't apply to something like a SPY, where your next day yellows are going to have way more volume than some of these grays. So, like for example, this has 74K volume there. If we look at some of these grays, it's going to be much less, right? So the SPY's same day trading is super lucrative and popular. But anyway, that's kind of the quickest way I can tell you how to decide on an expiration. In terms of like selecting an expiration based on your trade, there's a couple of kind of general guidelines that I like to give out. As a scalper, right? If you're trading scalps, which is real short-term trades, you're in and out in less than 15 minutes typically, you're going to likely be trading same days, right? That's typically going to be what you're scalping there. As a day trader, day trader being somebody who's in and out of a trade in around 1 to 4 hours. Generally speaking, you'll either be trading same days, weeklies, maybe next week's, depending on the type of person you are. And when I say next week's, I mean contracts expiring following Friday, typically. As a swing trader, it's really anywhere above 2 weeks for me. For me personally, is my general recommendation. And with all of those sorts of kind of rules of thumb, there's always exceptions, right? People swing trade same day or next day expiration just for fun. Sometimes it's kind of a lotto trade into something like an FOMC or an earnings. And same thing goes for scalp, right? You can certainly scalp a contract with 2 weeks time. So essentially you could do anything, but that would be kind of my general guidelines. Name of the study with the EMA green and red cloud. I think it's just called EMA cloud. I don't know. I'll send the link for it to you. Do this. There's a link. Al Brooks, what's my routine to find tickers with relative strength and good liquidity for options? So I'll start by answering the second piece. So finding names with good liquidity for options, I typically just kind of have my set of go-to names. I don't usually trade too far outside of my kind of standard names, which I pretty much ran through there. I would encourage everybody to have a general playbook of stocks that they like to trade. I would encourage you to not try and be somebody who wants to trade every single stock in the market, right? Because if you're spreading yourself too thin, you're going to realize that there's so many breakouts all over the market and you're going to want to catch every single one of them. And it's just not realistic, right? So have some kind of narrow focus. So that's kind of how I would answer that second half of the question. In terms of finding relative strength, like I said, it's really all about scanning through charts, right? Make it part of your weekly or daily routine to look through charts. Spend an hour on Sundays looking through charts. Spend 15 minutes a week reviewing those charts and figuring out the status of everything that you're watching and writing some notes on that. Really, that's the routine, just weekly and daily scans. And also there's some kind of online scanners that you could utilize as well. Nick entered a swing at highs and you're getting hammered 10 cons until June. Oh, June 2025. Yeah, plenty of time. I mean, when you say highs, did you hit it at like 73? Oh, that's brutal. Well, you know what, Nick? Use it as a lesson. Definitely use it as a lesson, right? When you're buying contracts with that sort of time, you usually don't want to be buying breakouts, right? You want to be the type of person who's taking those trades off the EMAs, taking those trades on strength after support, right? You don't want to be that guy who's doing what you did. But that lesson's got to be learned. It's okay. Don't beat yourself up over it. Just don't do it again. Mistakes happen in the market. Make sure you have some kind of stop loss. Probably wouldn't be too thrilled long on those on a weekly close below the 70 area. Even though the uptrend is still really strong, and you could probably get a couple weekly closes below 70 before it really matters. But you just want to have that discipline, right? For now, this is a decent level of support. Again, it is extended above the moving averages, which is not common for Coke. I mean, Coke doesn't rip like this really ever. I actually can't really remember a time where it's ripped like this. I mean, from 50 to 70 in a year is crazy for Coke. I mean, it just doesn't happen. I don't even think it really did that during COVID. So it's been on an absolute heater. Let's see what it did during COVID because I'm curious. So it dropped, wow. So it dropped 40% during COVID in the span of a couple of weeks. Obviously, it's not COVID, but it ripped 40%. And I mean, that is not common. I mean, recovering from COVID, it took it, I guess, a little bit less time than I thought. Anyway, Coke doesn't move like this. It's just, yeah, not a common thing. So hoping earnings will get you out of it. Yeah, I mean, certainly be careful with that mindset, right? Earnings can make your life a whole lot worse too. And honestly, Nick, my advice to you is if you're looking for reasons to stay in a trade that aren't valid, like you are very clearly in a bad mindset right now. When you're just hoping for things to go well, you're going to need to let go of that, right? You need to trade the chart. Yeah, you need to trade the chart, right? You cannot be hoping for things to happen because you will get absolutely destroyed in the market if you continue to do that. Totally makes sense to make the mistake once, twice, 3 times, 10 times, as long as you're learning from it, right? I'm not here to talk down on you in any way. I don't want to make you feel that way, but learn from it, right? Don't put yourself in this position again, and don't think that you can just hope for something to happen and it's going to work out. If you treat the market like a casino, it'll treat you like a gambler, and gamblers, 90% of them lose money over time, and 10% of them get a gambling addiction and lose everything. So you don't want to be that person. And 0.1% of them hit it big and just keep the money. Yeah, I mean, that's a great point, Aaron. If it does give you the top of this range, certainly wouldn't be a bad place to take some off. Yeah, if it'll go back there. And it looks decent for it after today. I mean, nice long downside wick off that 70. The hard part, Aaron, or the hard part, Nick, is that Coke doesn't look bad at all. I mean, it doesn't look bearish in any way. It just is a slow mover, right? And if you got an awful entry on it, it's going to just eat away at you for a while, especially because a bad entry on KO, especially on a day like this where IV was probably jacked all the way up. Yeah, that definitely hurts. Let's just see what they're at real quick because I'm curious. Coke 25.06 20. What's the strike, Nick? Hopefully, like some 75s. Hope some 75s. See if we can find your order. This you right here. Order of 10. Yep, 75. Did you buy them at 7:30 on a Tuesday, 9/3? I see an order of 10 to sit right here. Is your fill? Did you buy them at 335? 3.35 per contract? If so, you're not doing that bad. Thanks for being here, Husky. Appreciate you. That's you? Yeah. Honestly, you're not doing that bad, right? At least you didn't buy the dead top. Um, yeah, I mean, you were green the day after too, if this is for sure you. So anyway, lesson we learned here, right? If you do get the top of that range again, you're going to be out real close to your break even. I mean, it hit 3.2 the last time it hit the top of that range. It'll probably hit something similar, maybe 3.1 approximately, three-ish, which I mean, you lose $20 per contract on something like that. That'd be a win in my book, and you'll learn something from it. But just a note, when you're buying leaps, you'd never want to be buying the highs, right? You always want to be taking a look at leaps near some kind of support. But again, just a lesson for the future. All right, it's all good. All right, everybody. That's going to do it for tonight. Again, really appreciate everybody being here. This was a fun one. We will see you all in lecture next week. That's how River finds the trade cappers. That's it, Kyle. Yeah, I'll take a look at one more. That is it. It's pretty easy, huh? The order book never lies. And if somebody says they took a trade and you can't see it there, they did not take that trade. Sucks. Sucks to lie. All right, one more. Wow. Yeah, Walmart's on a heater. So is Costco too. Yeah, I mean, this is just insane. In the short term, though, it looks decent. Nothing real wrong with it. Right at the moving averages, definitely extended on the weekly, right? There's no doubt about that. But I mean, this is just extreme relative strength. It still looks reasonable long, honestly. I mean, yeah, volume. Eh, I mean, let's see. What's this high volume? I mean, this was at the lows there. I mean, volume now is about average, honestly. I wouldn't say there's anything um, really too positive or too negative about this. I mean, this definitely doesn't look like a short. And watch this thing drop in 10% tomorrow. Cool, everybody. Again, appreciate it. And I'll see you guys all in the next one. See you guys.